Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. It is a CNBC-TV18 exclusive. In fact, the government and LIC may offer to sell around 60% stake in IDBI Bank. Sources tell CNBC-TV18 that the government will invite EOIs either this month or by October. Sapna Das is joining us now with the latest update. Sapna, what are you picking up?
Well, in July, we had reported that government and LIC both together may be looking at offloading 65% stake in the IDBI Bank disinvestment. We are now going to understand that possibly that number is going to be closer to 60-odd%, which essentially means that both LIC and government together will continue to hold somewhere around 40-odd%. Even after the disinvestment. That's one. Second, of course, September is a timeline, internal timeline for the government inviting the UIs for IDBI Bank stake sale. However, that could also spill over to October. There is an outside chance. That possibility is there, as a lot of processes are involved, a lot of due diligence is on even at this point in time before the government firms up its mind to actually invite the UIs. Also, at every stage of the transaction, they will like to be in touch with Reserve Bank of India. I think that's where the situation is as of now. They want the RBI support on this entire transaction so that, there are no nasty surprises for bidders also. So probably at every point, reference to RBI will continue to be made by the government as and how the situation arises. Last but not the least, there are no serious concerns as far as the regulatory framework is concerned within which the IDBI Bank stake sale has to happen. There are two major conditions. One, whichever promoter comes and acquires stake in the bank, they'll have to reduce that shareholding to a certain level in 15-year timeline, and there'll be no change in the 26% voting rights cap. These are the two major conditions which the potential bidders will have to actually follow as far as this stake sale is concerned.
Okay, Sapna, thanks a lot for joining us with all those exclusive details. Moving on to the other exclusive now, the government is reviewing export duties imposed on steel and iron ore. No final decision, however, has been taken, but a proposal for calibrated reduction in the duties imposed on steel is being examined. Timsi Jaipuria is joining us with all those details. Timsi.
Well, it seems that some relief could be in offing very soon. But yes, as we speak, sources have told CNBC-TV18 that Finance Minister in a closed-door meeting along with top Finance Ministry officials and Steel Ministry officials took a detailed review of the current export duties that are being levied on steel and iron ore. Remember, in May, a 15% export duty was levied, post which the industry was saying that they are facing a lot of impediments because of this when it comes to their capex plans. And considering that, a formal proposal was moved from Steel Ministry to Finance for its review, and now formally Finance Ministry has taken a detailed review under FM's chairmanship. Proposal is to go for a calibrated reduction of export duties on steel, whereas when it comes to the export duties on iron ore, they might stay for some more time. However, whether a final decision has been taken or not, well, yes, Revenue Department is considering right now the proposal. They are doing a detailed analysis, post which only a final decision can be expected.
Okay, and we'll come back to you whenever there is an update on this one. Timsi, thank you so much. To the fifth headline now, the market gave a big thumbs up to the new listing today. There's a new kid on the block. India's dominant airport service aggregator platform, Dreamfolk Services, listed at 508 rupees per share, which was a 56% premium to its issue price of 326 rupees a share. The IPO, which was entirely an offer for sale, was subscribed nearly 57 times. Of course, it fell from those levels, but Vaishta Unwala is here with the details and a lot more. Vaishta.
Well, Dreamfolk Services Limited has had a blockbuster debut on the market today. It lists at 62% premium. This company is India's largest airport service aggregator platform with an estimated industry growth rate of approximately 40%. The company has a market share of 95% in FY22 and hence has a dominant position in the industry that they operate in. The IPO issue size is 562 crores, while the offer for sale with 33% dilution, which means that after the issue, the promoter holding would come to 67%, while public holding would stand at 33%. The IPO saw a total subscription of 57 times and hence means that has had good traction from the investor community as a whole. The company has also reported some very strong Q1 numbers. Today, the revenue had jumped by 6 times to 160 crores, while margins were at 12% and PAT stood at 13 crores versus 1 crore in the same quarter of last year. We had the management on our channel today early morning, and they said that the company commissions 15% of launch payment, which is made by the customer, there was a reduction in average gross profit per passenger from 138 in FY20, which was the pre-COVID year, to 128 rupees in FY22. The international business contribution is marginal at present, but they are planning to grow it further. Also, they hope to maintain similar margins from the railway business.
We have also integrated our systems with the airlines and the OTAs. So in case if anyone wants to even buy a lounge voucher, while booking the ticket, they can also do the same. So these are the differentiator what we have created in the market, and I think that is one of the biggest plus point. And not only that, we started as a lounge aggregator platform, but today we are an airport service aggregator platform. All the lounges have different pricing, okay? So if you actually see the metro city pricing is higher, the domestic lounges rates would be different to the international lounges. So on average, if I would say that if the pricing is around 100 rupees, what the banks or the card network would pay, we would keep around 15%, and the rest we pay to the lounges. In terms of the margin, I would say that because of the volumes, the way it's increasing, that's how you would see the difference. But we have always maintained that, and we would continue to have the 15% margin for us. The EBITDA would remain at 12%. I'm talking about the gross margin which is there. So that is at 15%.
Okay, that is about Dreamworks has listed on the bourses today. The other stock that we'll focus on today is Narayana Health, which gained on its plan to acquire a new hospital. They have basically acquired Shiva and Shiva Orthopedic Hospital in Bengaluru for a sum of 200 crore rupees. Now, it is an orthopedic and trauma hospital with 100 operational beds. So that is the basics about this new hospital that the company has acquired. It had FY22 revenues of 49 crore rupees, and in the first 4 months of FY23, that is till July of 2022, they did revenues of around 18 plus crores. So that means it is slightly an expensive acquisition that the company has made, 4 times sales to price. Now, while it is an expensive valuations, there are some positives which are attached to it as well. This will help them foray into trauma and orthopedic specialty, and this will be within the Narayana Health City campus, which houses 2 flagship hospitals, which are the likes of Narayana Institute of Cardiac Sciences and Mazumdar Shaw Medical Center as well. This is about what the company has planned to do. Additionally, they will also subscribe to OCDs, which is optionally convertible debentures of Shiva and Shiva Orthopedic Hospitals. And this will be subscribed in terms of OCDs worth around 80 crore rupees. So the company has an expectation of closure of this by 31st December 2022. Optionally convertible debentures will be redeemed after a period of 4 years. They do have an option, however, to prepay part or full amount anytime during the first 4 years. That is by when the closure is actually expected. The stock was higher by 4% at a point in time during the trading day. It did come off from the highs of the day, however, ended with gains of around 1%. That's about Narayana Health has made an acquisition of a hospital. From the healthcare space, let's go across to the consumer durable space. TTK Prestige gained close to 1% today. We spoke to Chandru Kalro, who is the managing director at TTK Prestige, and said that entry-level products are facing a slowdown in demand, while premium products continue to do well. Listen into what he had to say.
Level segment is not growing for us. I won't say we are under pressure. The upper segment is growing. The entry-level segment is kind of stagnant. That's what we are seeing. So Q1, if you see, for example, if you take pressure cookers, our value-added pressure cookers have grown at a far faster clip. Of course, Q1 does not have a base because the previous year base was not really comparable. But if you see, relatively speaking, what used to be a 70-30 between entry-level or aluminium and value-added, that is now more like 60-40 or even 25. So that is the kind of thing that we are seeing. Obviously, the inflation is hitting the lower middle class, which is why the entry level is slightly under pressure.
Okay, that is about TTK Prestige. And one more stock now, that is M&M Financial, gained over 2% after the company reported improvement in their disbursals and other business update for August. This is something that we told you yesterday. Today, we spoke to Ramesh Iyer, who's the Vice Chairman and Managing Director at Mahindra Financial Services. He says that the asset quality of the company will continue to improve in next few quarters too. Listen in.
Now, the disbursements have been good, collections have been good. Write-off is an outcome of are NPAs that we settle with the customer, either take back the vehicle and settle, or offer a settlement to the customer, and therefore the balance gets written off. So it is from the past NPAs which have been fully provided for, we take a call to write off. So it will have a contra from the provision coming down and moving towards write off. Also important to see the stage 2 coming down, which means the forward flow is not happening. Put this all together and you will kind of, read the conclusion that the asset quality is actually improving month on month, and we would see this substantially change in the next 2 quarters as well.
Okay, that is about M&M Financial Services. Continue to do well for the second consecutive day. And we also spoke to Century Textiles. The stock was down in trade today, 0.25% lower. We spoke to the company where the CFO, Snehal Shah, said that they have seen an improvement in demand in the paper segment despite higher input prices, which has worked in favor of the company. Commenting on the real estate business, he said the company is not looking to demerge its real estate vertical anytime soon. Listen in.
We are contemplating something where we have about a million square feet planned in the Nihara project, but that was supposed to be done after a few years. We are seeing whether there is a need for us to, fast track it right now, but there is no such decision made. But no other commercial plans in this year.
Okay, that is about Century Textiles. Moving on to a CNBC-TV18 exclusive now. Your insurance policies could soon be sold in demat form like stocks and mutual funds. Sources say insurance regulator will discuss the proposal with insurance companies. Yash Jain is joining us with these exclusive details. Yash, is this proposal likely to go through, and what does it mean for policyholders?
Well, indeed, it's an important milestone that India achieved that significant mark of 10 crore demat accounts in the country for the first time. And now the insurance regulator, the move that it is considering, could give significant pace to the growth of demat accounts in the country. What we've been given to understand from our sources is that the insurance regulator met industry CEOs, both life as well as general insurance industry, and that was to discuss issuance of insurance policy in a dematerialized or a demat format. As far as the thinking at the regulatory body is concerned, it is to first streamline the whole process of issuing new insurance policies, both on the side of life insurance as well as non-life insurance in a dematerialized or a demat format. Once that is streamlined, then converting the old and existing policies and bringing them on the demat platform as well. As far as dematerialization of insurance policies is concerned, that will be done with NSDL, CDSL and Carvi, which are the depositories, and it will be a proposal which will be discussed with industry CEOs today. This will be an important step towards financial inclusion, as it will also give these policyholders the benefit of availing loans against the insurance policies also, just like it is done against shares today.
Yash, thank you so much for joining us with those interesting details. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.